Hi everyone, welcome to the MBA 626 Risk Management course. I'm Greg Kogan. I'm going to be your professor this semester. And welcome to class. And I wanted to go over the syllabus actually with you all, as this is actually going to be an independent study course because there's only 4 of us in the class. So what I want to do is go over the syllabus with you guys first, and then I'll go over what the course structure will be. First week you can do is log on to Blackboard, which is where I have your syllabus, and basically the first day of class is tomorrow, and going forward we'll actually go according to this schedule here. So the course book that we'll be using is the Saunders and Cornett Financial Institutions Management, a risk management approach. And I actually have uploaded 7 chapter slides for you guys. So you get, I know that it takes about a week at least, or at least 3-4 days to get the book. And I get that you just buy it on Amazon as a hard copy. It's a great book. It's a great book. I have a financial background and used to work in financial services with banks and asset managers. And this book is very detailed. We'll use it as primarily as a resource. And we'll actually work on various things besides just the text. But it's going to be the backbone of the course, so I highly recommend you guys get it right away. Now, this is the course structure. And what we have here is, since this is independent study, what we're going to have is we'll be having these online sessions bi-weekly, where I'll be providing you various things such as readings, videos, homework assignments, discussions, and I'm going to keep you guys on track in doing your homework and doing your case study and doing your discussions, and I'm going to upload new content according to these sessions here. So the first one is will be tomorrow, which is on September 6th actually, and then the next one will be on September 21st, and so on and so forth. And we're gonna follow the Saunders text, which hopefully you guys can have by the beginning of next week. And since you're not gonna have the text until then, I'm going to give you your homework. Your first homework assignment will be due September 20th, and I'll release it to you guys early next week. So you guys will have the homework assignment, and I'll have more instructions on that. I think I will just give you guys the assignment on Blackboard, and you just either email it to me or upload it to Blackboard. That's how it will be done. But I'll have more details on that going forward. And basically what this course is going to be about is the various risks that are out there in the financial industry and the various risk management techniques that are widely accepted in the industry. So in the first session, we're going to be going into even who are the players in the industry, the main players in this industry of risk management, and insurance companies, banks, and hedge funds, asset managers, mutual funds, and what are the types of risks. Chapter 7 then is what are the types of risks that are really out there in terms of risk management. Then in session 2, we're going to go over the interest rate risk, which is what happens when interest rates change to the balance sheet of a financial institution, to the balance sheet of an insurance company, to the balance sheet of a mutual fund or hedge fund, and how do these managers manage credit risk, interest rate, basically the possibility of interest rates moving up or down. In the next session, in session 3, we're going to go over basically credit risk, which is more, think of it as more of a default risk. How do you manage that people are not going to pay back their mortgage, or businesses are not going to pay their business loans? How do banks and lending institutions manage this type of credit risk to begin with, whether it's rating agency, whether it's models, where it's default scenarios, measurement credit risk, getting to know your customer, We'll go through the various methods that credit gets analyzed. This is a huge industry, credit quality, and we'll go over that. The next session 4 is two pieces. We're gonna go over liquidity risk and foreign exchange risk. So liquidity has become a huge thing back in 2008 with the financial crisis, where liquidity became the number one risk. And this is all about how do you keep your assets liquid? How can you meet your obligations in a way where you don't get tied up in assets that are illiquid? And foreign exchange risks is all about how do you match your foreign assets and liabilities in the same currency? How do you hedge your whole balance sheet or liabilities to the movement at the foreign exchange currencies? Then we're going to look at sovereign risks and country risk and off-balance sheet activities in the last session. We're also going to look at operational risks in December, their first week. So these primarily three risks, we're talking about being exposed to a country or a continent or an area in terms of debt. And we're talking about off-balance sheet risk is how do you actually measure off-balance sheet risk, whether some holding companies have assets that are off their balance sheet and third-party companies that are consolidated in but really held off-balance sheet. And how do you measure that? How do you get comfortable with that? And then in session 7, we have operational risks. What are operational risks? Really, we have technology risks, we have regulatory risk, we have compliance risk. These risks are also very important. Huge amount of resources go into these, and we'll delve deeper into what this really means. And I also want to indicate that now in the current climate of risk management, the big risk also that's very, very high on top right now is sustainability. It's not necessarily a risk, but it's currently a transition. How are you exposed to any regulation regarding whether it's pollution or whether it's poor supply chain or reputational risk? What they call now is license to operate. In other words, are you doing enough to benefit society rather than hurt society to even have a license to operate? And this is a huge thing that a lot of resources are moving to. So we will have some discussions regarding this. This is a new cutting edge piece in risk management that's evolving very fast. So I'll be sure to update you on that. And so I will give you more information in regards to the first week, and we'll be in touch with the first homework assignment after the weekend. In the meantime, let me know if you have any questions, if you have any issues with the book or getting the book. Please email me. There's only 4 of us in the class. I'd love to see you in office hours. Please set up your appointment. And what I want to express also is the case study will really be more of a project. And this is going to involve us working on looking at the Green Bank of New York and looking at their portfolio of loans and really creating, I'll give you guys a page-long outline on the project in the next 2 weeks. And it will be basically you being the risk management officer for the Green Bank of New York and really going one by one and identifying all the risks that the Green Bank of New York is exposed to. So I'll be providing a whole folder with various financial statements, quarterly reports, and every deal write-up for every deal that they have financed, so that you have the information you need to do this. And I'll have a milestone page on where you need to, how you'll progress throughout the semester on the project. So I'm very excited about this. This is very interesting work we'll be doing, and I would love to meet with you as well to kind of go over and guide you in this project, as there'll be some time in between our sessions where you'll have some time to work on things, and this is where I want you guys to focus on, as the project as well as the homework and the discussions.